In this video, I'm going to discuss about Balance Scorecard. The Balance Scorecard is a strategic management tool used by businesses to measure and monitor performance across multiple areas. It is based on the principle that financial measures alone are not sufficient to measure the success of a business, and that other measures such as customer satisfaction, internal processes, and employee satisfaction are also critical indicators of success. So basically, balance scorecard is a solution for the limitations of financial ratios. Under this method, the performance of all of the areas within an organization will be measured and monitored. By using the balance scorecard, businesses can evaluate their performance across multiple areas and identify areas for improvement. The balance scorecard helps to ensure that the organization's strategy is aligned with its goals and objectives, and that everyone in the organization is working towards the same priorities. To implement the balanced scorecard, businesses typically identify key performance indicators. These are known as KPIs for each perspective and establish targets and goals for each KPI. They then monitor and measure performance against these targets and make adjustments as needed to improve performance. These are the factors that will be used to monitor the performance of business activities. Now let's get to know about the key performance indicators. These are known as KPIs. A key performance indicator is a measurable value that helps businesses assess how effectively they are achieving key business objectives. Key performance indicators can be used in variety of different areas within a business, including financial performance, customer satisfaction, operational efficiency, and employee performance. For an example, revenue growth, profit margin, customer satisfaction ratings, employee turnover rate, website traffic. Each of these examples are KPIs for a business. We can measure any activity or area within an organization using KPIs. The balance scorecard includes four perspectives: financial perspective, customer perspective, internal processes perspective, and learning and growth perspective. Financial perspective. This perspective focuses on financial performance, including measures such as revenue, profit, and return on investment. Now you may think why we are considering the financial perspective under balance scorecard method. Because the balance scorecard method is a non-financial performance measuring technique. The reason is we consider both financial and non-financial factors under balance scorecard method, which is why it is known as the balance scorecard. We consider both financial and non-financial performance of a business. Customer perspective. This perspective measures customer satisfaction and loyalty, including measures such as customer retention, customer satisfaction rating, and market share. These are the most common KPIs for each of these perspectives. Internal processes perspective. This perspective focuses on the internal processes that drive business success, including measures such as productivity, quality, and innovation. Learning and growth perspective. This perspective measures the ability of the organization to learn and grow, including measures such as employee satisfaction, training and development, and knowledge management. Now let's do this example so you can understand the basics of balanced scorecard method. Let's consider a coffee shop. Suggest KPIs for each perspective. Now we know there are four perspectives under balanced scorecard method: financial, customer, internal processes, and learning and growth. Under financial perspective, the coffee shop would focus on financial performance measures such as revenue and profitability. Some KPIs that the coffee shop could track in this perspective could include total sales revenue, and they can use the profit margins, and also they can use the cost per coffee. Likewise, they can use any financial measures under financial perspective in order to measure the performance. Under customer perspective, the coffee shop would focus on measures related to customer satisfaction and loyalty. Some KPIs that the coffee shop could track in this perspective could include customer satisfaction ratings. And they can also measure the number of returning customers. They can also measure the number of complaints. As now you can understand, these are the performance measurements for customer perspective. If the number of complaints are higher than the previous period, which means the business is not performing well. If the number of returning customers are increasing, which means the business is doing well. Under internal processes perspective, the coffee shop would focus on measures related to internal processes that drive business success. Some KPIs that the coffee shop could track in this perspective could include the time it takes to prepare a cup of coffee. We can also measure the inventory turnover rate. This is where the business can measure how fast the inventory is turning into finished products. Learning and growth perspective. The coffee shop would focus on measures related to employee training and development, which is critical for continuous improvement. Some KPIs that the coffee shop could track in this perspective could include the number of employees trained, employee satisfaction rating, and employee turnover rate. If the number of employees trained are higher, which means the productivity of the company will increase because now the employees have sufficient training. If the employee satisfaction rate is higher, which means the productivity of the operations will increase. Thank you for watching. See you in the next video.